Hello viewers, today's topic is amalgamation of companies. Let's understand amalgamation of companies with solving a problem. Galaxy Limited and Glory Limited are two companies engaged in the same business of chemicals. To mitigate competition, a new company, Glorious Limited, is to be formed, to which assets and liabilities of existing companies with certain exception are to be transferred. The summarized balance sheet of Galaxy Limited and Glory Limited as at 31st March 2020 are as given follows. Given the balance sheet of Galaxy Limited and Glory Limited, details about equities and liabilities, non-current liabilities, current liabilities. In assets, we have non-current assets and current assets. All the details are given. Assets and liabilities are to be taken at a book value with the following exceptions. The debentures of Glory Limited are to be discharged by issue of 8% debentures of Glorious Limited at the premium of 10%. Plant and machinery of Galaxy Limited are to be valued at 2,52,000. Goodwill is to be valued at, for Galaxy Limited, it is 4,48,000. For Glory Limited, it is 1,68,000. Given information about Glory Limited, that liquidator of Glory Limited is appointed for collection from trade debtors and payment to trade creditors. He retained the cash balance and collected 1,10,000 from debtors and paid 1,80,000 to trade creditors. Liquidator is entitled to receive 5% commission for collection and 2.5% for payments. The balance cash will be taken over by new company. You are required to compute the number of shares to be issued to the shareholders of Galaxy Limited and Glory Limited, assuming the nominal value of each share is in Glorious Limited is 10 rupees. Prepare balance sheet of Glorious Limited as on 1st April 2020 and also prepare notes to accounts as per Schedule 3 of Companies Act 2013. Let us solve the above question by calculating the purchase consideration under NAV method, which also called as net asset value method. First of all, the purchase consideration reflects the price that the acquiring company is willing to pay to gain ownership and control over the target company. Purchase consideration shall be carefully determined to ensure fairness and alignment of interest among all the parties involved. And what is NAV method? This method focuses on valuing the net assets of the target company to determine the amount that purchasing company should pay to acquire the target company. So let's calculate net assets value. Unless and until they have mentioned in additional information, we shall take the assets and liabilities at book value only. In the assets, we have freehold property, plant and machinery. They have given in additional information to be valued at 2,52,000 in case of Galaxy Limited. Motor vehicles, we have book value of 56,000. Inventory same as book value. Trade receivables, we have in Galaxy Limited of 4,62,000. But in case of Glory Limited, the additional information is given that the liquidator is going to collect from trade debtors and make payments to trade creditors. So the resulting company shall not take into consideration trade debtors and trade creditors for calculating purchase consideration. Next is cash at bank. In case of Galaxy Limited, it is 2,38,000. In case of Glory Limited, it is 24,000. 24,000 is arrived by a working note. Let's understand. Working note number 1. Calculation of cash balance taken over by Glorious Limited from Glory Limited. First of all, existing cash balance is 1,04,000. Plus collection from debtors, it is 1,10,000. And less payments made to creditors, it is 1,80,000. So overall amount available with liquidator is 34,000. After that, less liquidator's commission, which is on trade debtors, it is 5%. On trade creditors, it is 2.5%. So total amount is 10,000. 34,000 less 10,000, we have 24,000. Balance of cash taken over by Glorious Limited. Let's understand why liquidator charge commission. Because liquidator ensures he puts time and effort. Negotiating the settlements with trade creditors can be time consuming and require effort in terms of communication, documentation, and legal procedures. Commissions compensate liquidators for the work involved in facilitating these settlements. Less liabilities taken over at agreed values. Resulting company has taken over 6% debentures at 3,30,000, and trade payables is only for Galaxy Limited because in case of Glory Limited, the liquidator have already paid the trade creditors and took the commission on that. So the total purchase consideration in case of Galaxy Limited is 19,60,000. In case of Glory Limited is 7,20,000. It is given that Glorious Limited is issuing shares at the rate of 10 per share, which means the Glorious Limited has to issue 1,96,000 shares to Galaxy Limited, 7,20,000 shares to Glory Limited. Let's understand how the issue price have been decided by the purchasing company. The purchasing company might offer a premium over the current market price of the selling company shares. This premium is intended to incentivize the shareholders of target company to agree to the amalgamation process. The amount of purchase consideration is paid in the form of share capital by Glorious Limited. So the purchase consideration shall be included in share capital. Now let us prepare the balance sheet of Glorious Limited after the amalgamation. Let's understand the share capital in Glorious Limited is the purchase consideration paid to Galaxy Limited and Glory Limited. So share capital, we have issued 2,68,000 overall to both the companies at the rate of 10 per share. So total share capital is 26,80,000. In reserves of surplus, we have the amount related to premium on debentures. Book value of debentures are 3,30,000. The question given that the book value of debentures are settled at a par by issuing debentures of Glorious Limited at a premium of rupees 10 for each debenture. So the calculation is 3,30,000 divided by 110, we'll get 3,000 debentures. So 3,000 debentures into 10 rupees, which is premium, we'll get 30,000 as premium on debentures, which shall be represented in reserves and surplus head under securities premium. In case of long-term borrowings, we have debentures issued amounted to 3 lakhs. The assets calculation is simple and easy, as the share capital in resulting company is the purchase consideration we have paid. So the assets minus liabilities is equal to purchase consideration, which is share capital in resulting company. So we can write like this also. Purchase consideration plus liabilities is equals to total of the assets. This is the method where we can get easily the amount of assets in the resulting company. Instead, we can add the individual assets of both the companies under the same head to get the value of assets, and total of them will represent total of the assets.